We're about to find out the latest unemployment number in Australia. It's going to drop any minute. From the ABS, let's get to our business reporter, Edward Boyd. So, Ed, economists expecting it to rise slightly to 3.7%. So I'll let you take over as we wait for this figure to drop.
Yeah, numbers should come out any second now, Tom, but that's the expectation, that the unemployment rate is really going to remain close to 50-year lows. Remember, it's basically kept around the 3.4 to 3.6% level all of this year, which has been a bit of a surprise. A lot of people have been expecting the unemployment rate to be rising a bit more sharply than it has been. The other thing we've got to take into account has been the strong wages growth that we've seen in Australia, particularly in the previous quarter, where we saw wages growth in the September quarter lift 1.3%, which was the highest rate in 26 years. So that all adds into today's job market numbers. The rate has just come out and it is 3.7% during the month of October. So this was exactly what was anticipated by economists today. It's not really going to take the stock market by surprise or the Aussie dollar by surprise. But Tom, it's worth noting that the prediction from the Reserve Bank is the unemployment rate is going to slowly keep creeping up throughout the rest of this year. They have it tipped in their Statement of Monetary Policy that came out last week to reach about 3.9% by December. So we're at 3.7% now in October. So expect to see the unemployment rate slowly increase gradually over time. But just give me a second to have a quick look at the Bureau of Statistics website for a little more detail for you. Here we go. Unemployment rate, 3.7%. Sorry, I'm just loading.
Yeah, I'll
now.
go to that, Ed. I'll just say a couple of things, Ed, because I've got it up here. What's interesting, full-time employment increasing by 17,000, part-time increasing by 38,000. So this is part of the story, isn't it? We've got migration increasing really rapidly, so jobs growth is happening, but unemployment's ticking up, and that's going to be the difficulty here over the next year or so. We're going to obviously have more of an effect from interest rates, but that increased immigration, temporary being the big one, is going to put pressure on the unemployment number.
Absolutely. Look, Australia's population is growing at about 180,000 people every 3 months. So roughly 45,000 people every single month Australia's population increases. So that obviously puts pressure on Australia's unemployment rate because we're physically not creating enough jobs to keep up with the demand. So obviously we've got a lot of migrants coming to Australia. They're looking for work. The past few months in particular, we've seen a real shift from full-time job creation to part-time job creation. Last month it was particularly high. This month it's a pretty high number for the part-time roles as well. So these are some of the factors that are at play. Obviously, as we get into the November and December months, obviously there's a lot more part-time work around due to retail workers in particular around Christmas. Look, here's just a quick look at the numbers. You can see 55,000 jobs created during the month. The unemployment rate up very slightly from 3.6% up to 3.7%. The underemployment rate remained flat at 6.3%. And you can see there the participation rate, which is the percentage of people either in work or looking for work, is at 67%, which I believe is very close to a record high. So the numbers today really show Australia still has a particularly tight jobs market, and it is pretty close to the 50-year lows that we saw last year. Stock market reaction is muted. It was down about 0.2% before the numbers came out. So there's not really any surprises there on the share market front. Aussie dollar has been pretty strong the last couple of weeks, and you can see it's lifted slightly just above 65 US cents as of right now.
Just very briefly, for the RBA watching this, they'll be saying, well, not going to shift the needle either way, still expecting on hold for now, but it's a watch on unemployment.
Watch on unemployment, and remember next week you've got the monthly CPI indicator, at the end of this month you've got the CPI indicator, so that's important as well, and retail sales figures. So when they see those two extra pieces of data, they'll make a call on whether they need to raise rates next month or keep interest rates on hold at 4.35%.
Ed Boyd, thank you.